Hello, 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 and happy Thursday, community. Welcome to another community event on YouTube Live. Glad to see you all here that were able to make it to today's event. I hope your week is going great so far. As always, we're looking forward to these events as they really give us the opportunity to discuss our industry, highlight our industry, and of course, learn about everything surrounding it. And we always like to zoom in and also build parallels in regards to our ecosystem and build comparisons as well. And we are very thrilled to have you all here today. There's a lot to discuss. As you see, the topic of the day is the cryptocurrency markets. So we really want to highlight and identify the different markets that are existing within this industry. And it's important to really differentiate them so that we have a better understanding as far as the fundamentals and the liquidity, how it's spread. It's very important to understand this. So it will also help us to appreciate our ecosystem much, much better. So without further ado, let's get to today's session. And we can't do that before jumping to the comments, seeing who is here, acknowledging all of you. And then after we do this, we'll get to today's session. Also, I want to remind us that all tweets are out already. And so let's engage with the tweets community. Every single one of them are out, from Killer Whale, Survivor, and BULLRUN. They're all out. So let's engage with these as we are tuning in and listening in to today's session. With that said, let me come to you, community. Let me see who is here today, who was able to make it. My brother Demo is here. Dave, good day, my brother. I hope all is well. I'm great to be here in such an amazing community. We are happy having you here as well, brother Dave, and we are happy to be here as well. My brother Crypto Riser says, Bull Runners, it's time to educate ourselves. We are extremely blessed to be part of this amazing ecosystem with endless education and support. Thank you, Steve and Queen Awino, for this massive opportunity. It's a pleasure being part of this amazing community. It's a pleasure, being part of this amazing community. It's always thrilling. It's always exciting to be part of something so, new, something that we can build up together. So thank you for your warm words, Cryptorizer, and I hope you and yours are well. We have Queen Lati here as well. She says, hello, BULLRUN family. I am glad to be part of this family that is going to be witnessing great showers of blessings because of our one and only ones, Queens Awino and Brother Steve, who responded to the call. Queen Lati, always a pleasure having you here, seeing you in the community. Thank you for your efforts and always being part of these sessions. The beautiful part about this is that it's a community-driven, right, effort. So it takes every single one of us, including you. We can only succeed as a unit. We can only succeed and move forward as a community. So we want to also thank everyone involved and that is actively engaging in improving, bringing awareness to our ecosystem. Queen Lati says, family, we are so much privileged to be part of this ecosystem. The magnitude of the project will speak for itself. Beautifully said, Queen Lati. This is the aim of everything, is to really develop or build a global community that we can all be part of from different walks of life, and really be the platform where not just veterans, but most importantly, the newcomers also can find their way into the crypto world and start their journey with us. As one of our main pillars is education, as we all know. We embrace everyone that is new and wants to start their crypto journey. Our doors are open, and you're very welcome to be part of this. And with that said, on that note, also, we have all our links to our Telegram groups, from BULLRUN Token to Killer Whale and Survivor. These are our links to our Telegram groups. Feel free to join and be part of our community. Thank you very much, Queen Lati, for your input. It's very much appreciated. Brother Glenn is here as well. He says, good day, BULLRUN family. And thank you, Steve, for taking the time to continue to put out information. Thank you too, Brother Glenn, for being part of this community and for your experience, sharing it with the community as well. Always a pleasure seeing you in the community. We have Queen Val here, says, happy Thursday, family. Hello, Mr. Steve. Hello to our Queen Mother. Greetings back to you too, and happy Thursday to you too, Queen Val. My great brother Theo is here. Greetings, my great brother Steve, dearest Queen Mama Wino, and my wonderful BULLRUN family. I can't wait to get this started, as I know it's going to be another fire session indeed. Let's go. Always a pleasure seeing you in the community, brother Theo. It's always a pleasure. I hope you and yours are doing fantastic. We have Queen Goliba here as well. Hello, family. Mama Wino and Mr. Steve. Let fire start to the moon down never. Always a pleasure seeing you here. Queen Goliba, it's a pleasure. Thank you for being part of this session today. We have Queen Grace as well. Queen Grace, what another beautiful day as we wait to hear from you, Mr. Steve. So glad to be part of a positive family. Thank you, Steve, and our mom. Thank you too, Queen Grace, for all your efforts that you're doing, your presence, your input, your consistency. You're very, very much appreciated as well. We have Queen Mother Wino herself. Greetings, Queens and Kings. Another exciting day of being enlightened and informed. Always glad to be around our amazing family. Thanks, Steve, for all you do for the community. Thank you too, Queen Mom. It's always a pleasure having you here with us. And thank you for your leadership, your guidance, and you're very, very much appreciated as well. I have my brother Junior here. Always a pleasure seeing you here, my brother. Hello, Steve, and everyone else. Happy Thursday. It's a pleasure seeing you here as well, Junior. It's such a pleasure. Thank you for being part of this session today. And then we have Princess Mel here as well. Greetings, family. Greetings, Steve. And greetings to Queen Awino. I am enjoying to be here today. We are pleased and very happy to have you here with us today as well, Queen Mel. And then Queen Val says, let's hit the like button. This is for the sole reason and sole purpose to reach out to as many people as possible so that we can share this session that we are having here together with everyone else that is not part of the community. With that said, community, I want to thank you all again for being here today, for taking your time and being part of this session today. As we said, today's topic is the cryptocurrency markets. We want to look at some things in detail and just clarify some things, highlight some things, and of course also talk about current events, the news, what's happening right now in the crypto space. Just so that we are updated and informed of what's going on. With that said, let me share my screen so we can get this going. And before I do that, I also want to just set the stage as always. To set the stage for this topic today, I really want us to highlight one thing. We need to understand that there are different markets in this industry, and we're going to look at them separately, and we're going to highlight what sets them apart, right? And who's using one market and who's using the other, and why are they important, what sets them apart, what can we learn as an industry from these different markets, what is it that we can improve to be better as an industry. These are the things that we want to really look at as we progress, as we go through this session. The takeaway at the end of the session should be for us to understand the different cryptocurrency markets, to really understand the differences, what sets them apart, and then also understand what we need to do to really step up and be more efficient, effective. And then also after all of this, we have to zoom in, of course, and build parallels and make comparisons of how we are approaching this challenge or this market situation within our own ecosystem. That's very important. So that's the takeaway. So keep this in mind as we are talking and going through this session today. And as always, like I say, the tweets are out. Let's engage with them, community. And also, we'll come back to you at the end of the session and check if you have any feedbacks, any statements you want us to discuss, any questions, and so on and so forth. With that said, let me share my screen so we can get this going. Let's just briefly touch to the market. Let me refresh this. There's really nothing interesting here. The market has been in neutral. As you know, it's always based on fear and greed. With all the activities going on in the markets, we are really standing on the sidelines and just waiting and seeing what's about to happen. We also realize that the largest cryptocurrencies, Bitcoin and Ethereum, have been just between 63,000 and 64,000 now. Ethereum dropped below 3,400, but that's basically where it was mostly. I'm not going to go any deeper into this. Right now, we are going sideways in anticipation of the news and what's coming. Next week, we'll be having there'll be the largest convention, Bitcoin convention going on. And one of the main speakers there will be the Republican nominee, Donald Trump. He'll be one of the speakers there. And there'll be apparently a lot of information updates that he wants to give based on his strategy that he plans to do once he's elected in November. With that said, let's jump for today's topic. Let's kickstart it right away. Some of the news also that we hear a few days back, we see how nowadays we have major influential financial global leaders, right, that are literally on the forefront. And one of them is called Larry Fink. We know Larry Fink. He's the probably one of the, if not one of the most powerful individuals in the world. And he's the chairman and CEO of Blackrock, the largest asset manager that currently holds more than $10 trillion assets under management, and is literally the right arm of the government. And wherever there is a crisis, financial crisis, Larry Fink is there as an advisor, at least his team, to advise the feds, the government, and to bail them out and see how they can find a way moving forward. So this is the type of person now that is really campaigning and is really pro Bitcoin and the blockchain technology. And he's been really heavily supporting crypto, Bitcoin in particular, since they're the largest Bitcoin ETF issuers, as we know. And this, of course, has been pushing the markets, right? And has been pushing the markets forward. And now it's just amazing to see that it's not just retailers, you and myself now, discussing crypto or being enthusiastic about it, but now we have market leaders, industry leaders, major players in the industry, in the financial industry, in the traditional financial industry, that are literally making noise, campaigning, bringing awareness to the crypto space. So this is good for the industry, because this is how the industry grows. It's all based on adaptation, on embracing the blockchain technology, and this is how the industry grows, right? Based on adaptation, awareness, education. This is great, you know. So another great Bitcoin endorsement, like we said, from BlackRock's Larry Fink, could be a huge boost to investors, to the investors' confidence. You'll be surprised that many, actually the majority of individuals still are unaware of the crypto space, of what crypto is about, and even more are really just fearful, you know, of the Wild West. They hear the rug pulls, the hacks that are happening. They hear about, you know, all these different stories that you hear and experiences that you have, especially the ones that have been around since the last bull cycle. They've experienced a lot of ups and downs, those that went through the bear market. Majority of individuals are not here during the bear market. They just come back when the bull market starts kicking back in, because it's tough to be here during the bear market. But nonetheless, it's beautiful to see that market leaders, industry leaders are literally campaigning, making a lot of noise in regards to cryptocurrency and the blockchain technology, and bringing awareness, right? And like we read here, it grows, it fuels the crypto market, right? Now, keep this in mind. The topic today is we have different cryptocurrency markets, right? So the question that we'll have to answer is, which crypto market is this endorsement really fueling, right? We'll have to make a distinction, right? So keep this in mind. Another thing also is now, crypto is now deeply rooted into politics, right? Because we have the official nominated candidate for the Republican candidate, which is Donald Trump. He also is actually weighing in to make Jamie Dimon the U.S. Treasurer, right? He wants to give him the office of U.S. Treasury, so that he'll be the one in charge of U.S. Treasury. You know, right now it's Yellen, and the U.S. Treasury is in charge of the interest rates, obviously. So this is something. There's an individual that literally was a Bitcoin hater and a cryptocurrency hater, or at least publicly. But we all know that they actually have, since 2019, he's been having his JP Morgan coin. He has already a private blockchain, like we discussed, on the Ethereum blockchain, right, to facilitate collateral assets, partnering with Blackrock, using Blackrock's mutual funds as a tokenized collateral, right? We know all of this. So we always have to, pay attention to and go beyond what these individuals are saying, because they say one thing, but then we hear other things, right? So this is also another thing that just shows how cryptocurrency has become political now. Now politicians are campaigning for Bitcoin, cryptocurrency, blockchain technology, pushing it, and just bringing a lot of awareness to this industry as well, right? But like we discussed, there'll be a conference, Bitcoin conference, and former President Donald Trump will be one of the speakers there, and we believe that he might be revealing more details, at the conference. And this conference will take place next week, between 25th, actually a week from today, from the 25th through 27th, right? So this is something that many are looking forward to, as a lot might be revealed, and this will bring a lot of awareness, because it's literally one of the largest, if not the largest conference yet, Bitcoin conference. So this is amazing to see that major traditional financial individuals, powerhouses, institutions are really endorsing Bitcoin and cryptocurrency and the blockchain technology. It's now also into politics, and it's reaching out to so many people, and this is great. Now, keep in mind, we asked ourselves that the endorsement from BlackRock will be a huge boost for investors. Which investors? And that it's fueling crypto market. Which crypto market, right? Because we have different markets. Now, let's get to the bottom of this. Let's understand which markets will be benefiting from this. Same with Donald Trump's weighing in and talking about Jamie Dimon being the U.S. Treasury. This is a major position. This is a position of power. If we really understand the position of a U.S. Treasury, he's basically in charge of the liquidity, because interest rates dictate the liquidity, right? If they're high, it's less liquidity. If they're low, there's more liquidity. And this is what he's also appointed by BlackRock already, because Jamie Dimon and JP Morgan, they are the AP, authorized participant, and they're in charge of Bitcoin's liquidity as well, right? They're in charge of how much liquidity gets in or out of Bitcoin. So now imagine an individual like this, and this is the head of the largest bank in the world. Now, not only is he in charge of the digital form of gold, its liquidity, but now potentially he's being considered to be the US Treasury. So he's also in charge of the fiat interest rates and liquidity that is being printed. So we need to really pay attention and see through all of this, what's about to happen, right? And if it comes to money, many can change their minds, and if individuals are generating revenue and are profitable in some way, that's the biggest incentive for individuals to change their minds. We are humans, we change our minds all the time, right? So I believe once Jamie Dimon saw how lucrative the ETFs, Bitcoin ETFs, have become, and how a large amount of transactions are flowing through, and so on and so forth, he definitely changed his mind. And let's understand exactly that, right? Because there's two different markets. Let's start with the one that we are more familiar with, right? And this is the headline, and these are the facts, these are the data, right? With the first market that we are also familiar with, trading volume fell for the third consecutive month, right? Based on CC data. So this is a data company. So trading volumes on centralized cryptocurrencies exchanges. So this is the first market, is the centralized exchanges, right? This is the first market that we know. This is where you and me, retailers, majority of retailers that are not as sophisticated and to use DeFi, such as Uniswap, they mainly, a majority are still using centralized exchanges. So the volume on these, trading volume on these centralized exchanges have been plummeting, right? And they dropped by 20% in June alone. Overall, since its peak, as we see here, it's dropped over 50%. This is just the trading volume alone, right? Like we say, marking the third consecutive month of decline, right? Now, this is interesting. This is very interesting. And if we analyze this and look at it even further, we'll understand that one of the arguments, the reason why this happened, was based on fear again, right? Because this is how our market is led: fear and greed, right? So the argument here is that the decline was based on the fear of the sell pressure by Mt. Gox, right? So Mt. Gox might have been the cause, might have been the reason, because the selling of it, because this exchange had said that the month of July it will start repaying issuers that have been waiting for their Bitcoin for over 10 years. And this might have caused a lot of fear, and people are just, to secure their assets, they went ahead and started just blindly selling, right? Another one is because, like we know, the German government also, that have been also contributing to selling, and actually they sold all of their Bitcoin positions, right? So this might have been, there's an argument that this might have been the cause. These are the reasons why we saw that retailers were hesitant to really be part of or participating in trading. So these are the reasons why trading volumes might have slowed down. So this is just to highlight that this is one of the markets. This is one of the markets that we are aware of. This is one of the markets that retailers are participating in, and we really need to pay attention to this. Now, South Korean crypto exchanges, including Upbit, Bitfinex, and Qcoin, they also recorded that they had a significant reductions in volume, which declined between 45 to 32%. So we see that centralized exchanges are not just reducing the supply as far as how much Bitcoin and Ethereum are on the centralized exchanges, but this also, they're also declining as far as volume, right? And how are centralized exchanges generating revenue? They need volume. So that means if you see that trading volumes are decreasing, this means that their revenue is also decreasing. And this can endanger these smaller exchanges, right? And we all understand that if you have your assets on centralized exchanges, that you don't have your keys with you. They're not your keys. So if these institutions, if these centralized exchanges go bankrupt and you have your assets with them, you lose your assets. It's as simple as that, right? This is why we always say not your keys, not your wallet, not your assets. So this is why we always aim that get your own wallet, put your assets in your own wallet in case of these exchanges going bankruptcy. As we see the volumes are declining, this means the revenue is declining. We don't know what can happen, right? They might be insolvent. And then we saw how it happened to Mt. Gox, it happened to FTX, it happened to Terra Luna. So many businesses went belly up due to lack of liquidity, lack of cash flow, and lack of mismanagement and risk management, right? So this is what I just wanted us to highlight. Another thing also I want us to highlight is, in contrast of all of this, in contrast of overall trading decline, stablecoins, as usual, stablecoins transfers have shown steady growth, indicating widespread adoption. So not only are stablecoins being adopted, but actually they've also increased 16 times if you compare it to the past 4 years, right? So already reaching almost 1.7 trillion in Q2 in the second quarter of this year alone. So we all know why stablecoins are in such high demand. First of all, they're the super apps right now, but we also understand why stablecoins are such high demand, especially in times of uncertainty. Many people like to trade or swap their currencies into the cryptocurrencies into stablecoins due to safety. And that happens often also because stablecoins are the most liquid cryptocurrencies in the industry, of course. So due to tons of liquidity and just catching a break, catching a breath, as the markets are so volatile, many can't handle the volatility, so they rather just buy swap to stable coins and just wait for the market to be finished being volatile and then understand which direction it will take, and then they can come back into the market. So stable coins are often being used as parking places, where you can just catch your breath, get into a stable coin and just wait for the market to balance and stabilize again, and then they can move on from there. With that said, this is the first market. It's the centralized exchange market. This is where the retailers are trading, and this has been falling. The volume has been falling for 3 consecutive months. Keep this in mind. Now let's look at the second market. The second market is quite the opposite, right? The second market is the over-the-counter spot trade market. It's booming. It's actually up almost 100% in first half of 2024 alone. So for the first 6 months, it almost doubled. It's by 95%. It's booming, and this is the market for institutions, right? So this is over-the-counter services. This is companies, enterprise offerings, right? They are booming. They're doing great. And this is where, when you hear that a microsailor bought Bitcoin, or if you hear that all these asset managers or institutions or big investors, you'll understand that they all purchasing over the counter. They're not using the same market like the retailers. This market has been going down for the past 3 months, and it dropped by over 50% within those 3 months. Meanwhile, institutional market has been booming. It's up almost double, by 100%. And why is this the case, right? So anyway, institutional over-the-counter market spot transaction volume jumped by almost 100%, by 95% year to year. And in the first 6 months of 2024, imagine, alone. So, and this is from brokers, over-the-counter desk, and hedge funds, right? So really just institutions. This is not retailers. This is literally institutions and very wealthy individuals, right? They don't trade where the retailers trade, the normal retailers. These are the two different markets that we really need to understand, that these are separate markets, right? So let's read more about this market. So of course, because Bitcoin rallied since January, when the Bitcoin spot ETF were given green lights to trade, Bitcoin hit all-time high in March already, right? Just simply because the excitement about the Bitcoin spot ETF, it was a major milestone. It legitimized the cryptocurrency space, specifically Bitcoin, and it opened doors to so many investors and speculators to really be able to purchase Bitcoin in the form of a stock, right, through ETFs. So this speculation pushed Bitcoin's price to all-time high back in March, and also spot Ethereum ETF also was the second wave of excitement, and this brought a lot of awareness to Wall Street stakeholders, right? And we all know that Wall Street is the traditional market. Wall Street are the established traditional financial experts, right? And we see how, like we said, these are the Larry Finks, right? They are now campaigning for Bitcoin and the blockchain technology. These are the politicians like Trump, and these are also the Jamie Dimons, right? That are being promised high political positions to embrace the crypto space. But how will this work out? How will this go? You know, so these are the questions we'll really still have to wait and see how it will unfold. So again, what I want to highlight here is the trend indicates that investors have stayed within the industry, right, despite the volatility. Because again, stablecoins also took a piece of the pie. Fiat-pegged tokens like Tether nearly tripled in transaction volume year to year. So we see that nowadays individuals don't have to exit the industry. They don't have to exit the market. They can just swap to stablecoins such as Tether or USDC, and then remain within the industry and just wait to see which direction the market will take, and then they can make a decision, right? So again, even in the over-the-counter market, stablecoins are the most preferred cryptocurrencies, and their volume has tripled even on the over-the-counter part of the market, right? So both on the retailer side and the over-the-counter institutional side, stablecoins are the most preferred, and they are the ones that have been experiencing growth and consistency, right? And why is that the case? Simply because they are stable and they're liquid, right? If people are uncertain, fearful, they usually swap to stablecoins to just catch a breath and wait to see what the market will do, and then they can make a choice from there. So let's move on. Like we said, the ETF approval officially, based on the latest news, the ETFs are supposed to go live in 5 days, specifically July 23rd on a Tuesday. And 3 have already gotten the green lights. A majority of them have already updated their so-called S1 documents, right? And filed it back with the Security and Exchange Commission, the US Security and Exchange Commission. So once these documents get approved by the financial regulator, and it will start hitting the market now. And we also saw that the Bloomberg portal has already been updated or starting to be updated. You see these like 21 shares is already being registered on there, and that's usually the final step to onboard them, so that once the trading starts, the data can be monitored on there. So it's really sure and certain based on 2 sources that are familiar. And they also say that by early next week, which is Tuesday, the SEC will likely do this next week on Tuesday. So now the same thing that happened with Bitcoin ETFs, it's now about to happen with Ethereum ETFs, right? Remember, we're discussing the two different markets, right? And the first market is the traditional market, right? That is the traditional market of the centralized exchange. This is where majority of the retailers are trading. And then we have a second market, which is more geared towards, it's over the counter, and it's more geared towards institutions. Community, it's important to understand these differences and to really distinguish one from the other. We need to understand this, right? Now that we understand that there's a centralized exchange where retailers primarily are trading, and then there is a over-the-counter service where institutions are trading, now we need to understand, before we understand, let's understand first of all, now the same thing is going to happen with Ethereum ETFs. So obviously Ethereum ETFs are also going to be traded on these two separate markets. So retailers are going to trade on centralized exchanges as usual, or on decentralized exchanges, depending on their expertise. And majority of the trades, obviously, of Ethereum ETFs will be also over the counter, right? It will be traded through large institutions, large investors, and this is how the ETFs are traded. They are traded over the counter, right? And we need to understand this. ETFs are not traded where retailers are trading. Retail ETFs are traded over the counter, right? We need to understand this. So when Tuesday comes and we hear how hundreds of millions or billions of dollars are being traded in Ethereum, and we don't see any price movements on centralized exchanges, we should understand that, oh, it's because they are not trading on the centralized exchanges, they're trading over the counter. And this doesn't have a direct impact on the price directly, right? Because they have their own market. They have their own liquidity pool that they're trading on, right? So with that said, let me see here. No, this is it. So with that said, let's look at another news right now, right? Remember how in both markets, traditional centralized exchange market where retailers are trading, and over the counter where institutions are trading, what did we take away? The takeaway was that each of them, both of them, it was the stable coins, right? It was the stable coins that were really doing well, right? It was stable coins such as Tether that were really, they even tripled their volume as far as institutions over the counter, and they doubled if it comes to centralized exchanges. It's stable coins that really got the best of it, and they hit 1.7 trillion just in Q2 alone. So this, of course, brought a lot of attraction to large institutions. Remember how we say that we'll start seeing asset managers issuing stable coins? Here we are. State Street is the third largest asset manager, and they are creating their own stable coin, right? They want to tokenize assets, they want tokenized deposits. They're creating their own stable coin now, and this is the future. This is what's happening, right? And this is what we've been discussing all along. This is all part of getting US debts under control, because the more institutions, financial institutions that are legally regulated to issue stablecoins, and through regulation they're required to purchase US debts, this is great for the US economy and for the global economy, because this just gives the Feds the green light now to be able to just print as much fiat as they want, because now they have multiple trillion-dollar institutions such as State Street, such as JP Morgan, we'll see that, such as VanEck. VanEck also is one of the competitors of BlackRock, one of the asset managers, they are coming out with their own stable coin as well. And BlackRock is not going to come up with their own stable coin because they're heavily invested into Circle, the USDC issuer, right? So because BlackRock already partnered and is heavily invested into USDC, they already have their stable coin of choice, right? JP Morgan has theirs, Van Eck has theirs, and now State Street also is coming with their own stable coins. And these are trillion-dollar asset managers, meaning they're potentially, since they're into tokenization, they obviously will have to back their digital tokenized assets they'll back it with their own stablecoin. And if they need $1 trillion worth of stablecoin, that means they'll have to purchase $1 trillion worth of US debts, right? So this is all amazing news for us, community, because for one, BlackRock already laid the foundation and chose Ethereum, right, as their blockchain of choice to issue a liquidity fund, right? JP Morgan already followed suit. They also chose Ethereum to create Onyx, their private blockchain, and also the JPM coin, which is also a private stable coin. So we see that, and State Street will also obviously follow suit and build their stablecoin on top of Ethereum as well. So as we see, and Van Eck already built their stablecoin on Ethereum also as well, by the way. So all these asset managers that decided to issue stablecoins, they all issued them on Ethereum, on the Ethereum blockchain. We'll look at that in more detail shortly. I'd like us to read further in this article, as it has some really interesting news here. So the traditional financial heavyweights are getting increasingly involved in tokenization efforts, right? And they're putting financial assets on the blockchain. This is their goal. Put all your assets, all these $1 trillion assets, tokenize them and then bring them on chain. This is great for them because it's more efficient, it's cheaper, it's faster, it's open 24/7. It's just great for the operational benefits, right? What we need to also understand, let me go down here. Okay. Traditional financial heavyweights are getting increasingly involved in tokenization of traditional financial assets, right? And we all heard about RWAs. This stands for real world assets, right? And by placing bonds, funds, or credit on the blockchain, right? So this is the future, community. This is what we can anticipate. This is what's happening as we speak. This is not some wishful thinking. These are things that are happening as we speak, and they're all taking place on the Ethereum blockchain. And we see how financial leaders such as BlackRock, JP Morgan, they're heavily involved in politics as well. They have a large say-so. They're well connected into the political realms. And now you see how we all know Larry Fink is already well connected with the feds and the government. Now we see Jamie Dimon also getting a higher position, potentially as a U.S. Treasury position. This U.S. Treasury position is the most powerful position you can have, because basically you are literally in charge of the money printing, right? So this is very important to understand. So like we said, these institutions, they do that because it increases their efficiencies, right? It's faster, and it's round the clock, 24/7 settlements, and it's lower costs. It's cheaper, faster, more efficient, and you can do these settlements 24/7, right? Now, stable coins are blockchain-based cryptocurrencies, right? With a pegged price, as we know, to the external asset, which is the US dollar, right? So most stablecoins are pegged by the US dollar and are widely used as a tokenized version of cash, right? So we'll soon understand why are these asset managers so keen to develop and issue their own stablecoins. We'll get to that, right? So another thing finally here is that asset management giant BlackRock, which now offers the largest spot Bitcoin exchange traded fund, we'll look at that shortly. They have the largest Bitcoin ETF, of course. We'll look at their fund shortly. They introduced their first tokenized money market fund. Where did they introduce it? On the Ethereum network, right? That's where they have the liquidity fund. And several decentralized protocols are building on it. So this liquidity fund on Ethereum, a lot of DAOs, decentralized autonomous organizations, are looking into investing hundreds of millions of dollars into BlackRock's fund. Actually, MakerDAO has put aside $1 billion that they want to invest into BlackRock's liquidity fund on Ethereum. So this is heavyweight. This is heavy duty. You know, if we see how established DAOs are using their treasury funds to purchase US debts, tokenized US debts. So not only are traditional institutions and asset managers purchasing US debts, but now well-established crypto companies are also purchasing tokenized US debt. So this is great for us because all of this is developed and built on top of Ethereum. Secondly, this gives the Feds the green light to print as much money as they wish, right? To get the economy running. It's needed. It's much needed. And with the elections coming in right now, the way politicians boast and keep their seats is by the merits of the economy, right? If the economy is booming, people are employed, money is flowing, markets are doing great, you know, the stock market, the crypto market, everything is booming. That's how you get your seat, you retain your seat, and that's how you get re-elected. And this is now the reason why you see, you know, the nominee, the former President Donald Trump, you see Biden, you see all these politicians talking big on how they want to embrace cryptocurrency and all of that. And we all know how politics works. You know, the one that can tell the best story usually wins, right? So anyway, global bank JP Morgan, they already developed their private blockchain. As we know, it's called Onyx, right? And they have their own JPM coin, like we discussed. This Onyx blockchain is a private digital version of the US dollar. JPM coin is a private version of the US dollar. So JP Morgan, they have their US stable coin. VanEck, they have their stable coin. State Street, they're creating their stable coin. BlackRock, they're heavily invested into Circle, and Coinbase, which is the co-owner of Circle, who is the issuer of USDC. So BlackRock won't come up with their own stablecoin. They already partnered with USDC, and USDC is what they're using to pair their BULLRUN token with, the tokenized treasury bill, right? So they won't come up with their own stablecoin. They already have USDC, so they're pushing USDC. So with that said, I just wanted to highlight how large institutions, right, such as BlackRock, JP Morgan, State Street, they all have their stable coins. They all have using tokenized assets, and they're all into purchasing US debts, right? And now we even have established crypto companies with large reserves in the treasuries that are also buying US treasury bills now. This is how they're going to skip nations from buying US treasury bills, and now they have institutions doing that, financial institutions. If financial institutions were not already in had great power, now you can see how even more powerful they become. So here you have JP Morgan, led by who have their own stable coin. They're purchasing US treasury bills, right? And at the same time, Trump is putting Jamie Dimon, the CEO of the same JP Morgan, who have their own stable coin and they're busy having to purchase US Treasury bills. Potentially, he is being appointed to become the US Treasurer. We see how close these individuals are working together to really put the US dollar on the map, to ensure that the US dollar remains the global reserve currency. So this is great news for us, for the industry, and especially for it's great news for the blockchain, because like we saw, everything is on the Ethereum blockchain, right? All of this is on the Ethereum blockchain, as we see here. Ethereum Network. This is great. Blackrock is on the Ethereum Network. JP Morgan is on the Ethereum Network. VanEck is on the Ethereum Network. State Street is on the Ethereum Network as well, right? So this is great. This just shows that trillions of dollars are getting ready to be tokenized. All these assets are getting ready to be tokenized by BlackRock, State Street, JP Morgan, VanEck, and they're all coming on the Ethereum blockchain. This is great news for us, and this is the difference. So even though they'll be trading over the counter, right, which is already booming, centralized exchanges like WPR asked one day, like, how relevant will centralized exchanges be? Obviously, we see how they've been dropping substantially in volume. They hit their peak, right? Right before, when Bitcoin hit all-time high, and then now it's dropping back down. So centralized exchanges won't be used as much. They'll literally die out, and literally DeFi is going to take over. And over the counter, which is led by Coinbase. Coinbase is the #1 over-the-counter exchange, right? And they are the #1 custodians of Bitcoin also. So we see that obviously Ethereum will face the same fate, right? So with that said, with all these asset managers wanting to issue their own stablecoins, why is that the case? Why is that the case? And this next article is literally painting the picture clearly, right? Tether, which as we know is the largest stablecoin right now, we see how they, in the last quarter alone, the first quarter of 2024, so within the first 3 months of 2024, they already they have a record profit, net profit of $4.5 billion. So State Street, JP Morgan, BlackRock, they're not into this because they just like the blockchain or like cryptocurrencies. They're in it because it's extremely lucrative. So the same JP Morgan and Jamie Dimon who are so against blockchain, all of a sudden now they have their own version of US dollar. They have their own stable coin. And I wonder why, because they see how lucrative it is, right? And if Tether, I want us to really understand this. Tether made $4.5 billion in 3 months. And if you look at Tether, they only have a market cap of 113 billion right now, right? You see here, 113 billion, that's their market cap. So just 100 billion, basically. That is a drop in the ocean, because like we just saw, these are institutions with trillions of dollars, $10 trillion, $7 trillion, $5 trillion, right? So imagine their profit, because this profit comes from the 5% of the treasury bills, right? And they have 100 billion and already making this type of money. What about if they tokenize the treasury bills like BlackRock did, and now they have tens of trillions instead of just 100 trillion? So that shows you how much revenue these institutions are getting ready to generate, right? So it's very lucrative, and that's what's pushing them. That's why you see them on TV, on CNBC, all over, campaigning, talking big talk about how great Bitcoin is and cryptocurrencies and so on and so forth, luring retailers to come and purchase using the centralized exchanges, right? Meanwhile, they are using over-the-counter spot exchange, right? And we'll get to the reason why. We'll get to the reason, the difference, what sets them apart, right? But keep in mind, retailers are using centralized exchanges. Its institutions are using over-the-counter. These are two separate exchanges with two separate liquidity pools. So let's move on. Tether is generating a lot of revenue with barely 113 billion. So imagine these institutions like State Street. They have trillions assets under management. Blackrock, 10 trillion asset under management. JP Morgan is the largest bank in the world with trillions of dollars asset under management. And they're getting ready to use these funds as collateral, BlackRock's funds as collateral, using their Onyx blockchain, which is worth trillions of dollars. So, and they'll be legally bound to purchase US Treasury bills because to back their US dollar, right? The JPM coin is a stable coin. So you see where we're heading with this community. A lot of liquidity is about to hit the Ethereum blockchain. And this is great. This is amazing news for us. And we see everything unfolding right in front of our faces, right? So now let's find out why, or what sets the difference. What's the difference between these two different markets, the centralized exchange market and the over-the-counter market? What's the difference? The difference is very, very clear and it's very obvious. It's the liquidity that sets the difference. ETFs have liquidity close to 70 billion right now. So all the Bitcoin currently that are being bought by JP Morgan, and they are issuing shares to BlackRock to sell to their clients, the liquidity right now is close to 70 billion right now. That's how liquid the ETFs are, right? And if you, in comparison to central, and this is over the counter. This is over the counter liquidity, 70 billion, right? This. They're booming, right? Business is booming, 95% in the first half. They're doing great. These are institutions trading over the counter, right? These are ETFs, right? You see here. Now, let's look at centralized exchange. Centralized exchange, Bitcoin barely has 1.3 billion. So if you look at 1.3 billion in liquidity and you compare, and this is the centralized exchange, and compare it with over the counter, which is 70 billion. So they are selling the same commodity, which is Bitcoin, but one has 70 billion in liquidity, the other one has 1.3 billion in liquidity. Now you have major institutions such as BlackRock, State Street, and they have trillions of dollars. So buying $1 billion worth of Bitcoin or $600 million worth of Bitcoin is normal on a daily, like in one day. And the centralized exchange will never be able to handle that. It will be way too volatile. It will affect the market heavily. This is why they choose to trade over the counter using their own liquidity in the form of ETFs. These are separate exchanges. And this is why you see one that keeps declining, like we read here, right? This one keeps dropping. And it's been dropping the last 3 months, and we can see it in this chart as well. Since March, it's been dropping, and it dropped over 50% already, and it keeps dropping, right? Because large institutions, wealthy individuals, they are removing the money from centralized exchanges and bringing them over to the over-the-counter because it's just way safer. It's more liquid. Or we see how they have been swapping the Bitcoins for stablecoins to just hold them there until the volatility stops, right? And why? Because stablecoins are extremely stable, as the name suggests, and they're liquid. So if you have stability and liquidity, this is how large institutions prefer to place their bets, right? This is why individuals with hundreds of billions of dollars to their disposal, they will choose to purchase US Treasury bills. This is why BlackRock chose to tokenize Treasury bills and pair that token with USDC. It's a win-win for everyone, because now if you have tens of billions to invest, you don't want volatility, and you don't want to be part of something that is has low liquidity and is volatile. One day it's up 10%, the next day it drops 30%. That's too volatile. The markets are not liquid enough, you know. So this is why you see large institutions, they rather go with ETFs. It's a whole different market. It's an over-the-counter market. We need to understand this. And even when Ethereum ETF is coming next week, we need to understand that they're going to be traded over the counter, right? Let's not be illusional. They're not going to trade on centralized exchanges. The centralized exchanges will be you and me, retailers. But the real money in the hundreds of billions of dollars tradings will take place over the counter. That's how it's going to take place. It's going to take place over the counter. So this is what we need to really understand and separate these two. And the difference between them is, one is extremely liquid, because this is how these institutions generate revenue, through transactions, through volume, right? They're charging fees, custodian fees, management fees, and just trading fees, right? So this is how they generate revenue. And the more liquid their fund is, that means the more volume they generate, and this is how they generate tons of volume. They make tons of money. And now they are also into the stablecoin industry. They're issuing their own stablecoins, like JP Morgan did, and like State Street did, and ARK Invest. Now, because it's lucrative, right? It's all about how lucrative it is. At the same time, all of this is benefiting the US government, because now it enables them to get a grip of their US debts. So now they have institutions with trillions of dollars in assets that can afford to purchase trillions of dollars in US debts. And this will allow the US government to print fiat in the trillions of dollars and still be in good shape, right? So it's a win-win. The US government can print more money, stimulate the economy. These institutions are earning billions of dollars every few months just by purchasing US debts. So the institutions win, and the government wins, and the retailers win, because one, the retailers are responsible for over 70% of all the economic transactions in the US alone. And this, of course, will mean that all these printed money, printed fiat currencies are going to land in crypto, on the Ethereum blockchain primarily, right? So why am I always talking about Ethereum? Because for one thing, and we need to understand, and this is also what will set Ethereum apart from Bitcoin, is one interesting thing with Ethereum is, if you look at the Ethereum blockchain, the top three, actually even the top four applications are based on staking, right? The number one is Lido, based on staking. Eigenlayer, the second one, based on staking. Aave, as we know, their utility is lending. However, they are big on staking. MakerDAO, they're issuing the DAI token, right? And they are also heavily on staking, right? So even just the top four, even ETHFi is based on staking. Uniswap, yes, it's an exchange. However, it's based on staking. Look at even the seventh one is staking. I think you get the idea. Staking plays a major role if it comes to Ethereum, right? Because it's on proof of stake. And what I want to highlight here is the total locked value. This is the liquidity. This represents how much liquidity is within the blockchain, right? Currently, this is nothing. This is a drop in the bucket. Why am I saying this? Let's look at it even clearer. Ethereum, if you look at the entire industry, Ethereum alone has over 60% of all the liquidity, right? And it's almost 60 billion, like we said. The rest is Solana, has a little bit Tron, and Tron, the majority is Tether. We know that. USDT, Tether, Tron has the most Tether. If it comes to blockchains, Tron has the majority of Tether, the USDT stablecoin. However, looking at the entire industry, Ethereum has the majority of liquidity. And this before all of this. This is before all this explosion of real world assets. This is before all this liquidity that is about to enter the space. This is before the interest rate cuts and the Fed starting to print fiat currencies. Already, nonetheless, we see how Ethereum is already covering 60% of all liquidity in the industry. So this just shows you what we are about to experience. And this will be a winner takes all, right? And in the real world, the number one asset manager by far is Blackrock, right? Everybody knows that. And the reason why that is simply because they are just dominating in the liquidity front, right? If it comes to liquidity, BlackRock is just dominating. They have the most liquidity out of all ETFs, all of them. So if you have liquidity, you literally dominate the industry. And that's why they're the number one as far as they hold the majority of Bitcoin. They surpassed Grayscale by far now. They're holding almost 21 billion in liquidity for their ETFs. This is over 1.5% of all Bitcoin supply, and they achieved this in less than 6 months. This is amazing, right? So back to the point, all of this liquidity is coming to an already Ethereum, which is already dominating in liquidity. Like we always say, Ethereum dominates. If it comes to liquidity, developers, applications, Ethereum is the place to come. And this is why we see State Street, JP Morgan, BlackRock, all of them are choosing the Ethereum blockchain, right? They all come and want to build on the Ethereum blockchain because they understand that this is where you want to come to. This is where all the liquidity is, all the applications are, the major applications, and this is where you want to come. So what we see here is that the major applications on Ethereum blockchain that is the most liquid are based on staking. And staking, if we look at the top 3 alone, even the top 4, they alone already cover majority, over 90% of all the liquidity. And they're all have to do with staking platforms. So this just shows you how the utility of staking plays a major role. And if you have a solid staking platform that is efficient, sustainable, the future is bright, right? And if you have an asset that is scarce, that retains liquidity, and that gives great incentives through sustainable staking distributions, and that uses its volume efficiently, I think you get the drift. The future is bright. We just discussed how much liquidity that is about to enter the space, and BlackRock and JP Morgan and State Street, these are smart. This is smart money, and they chose Ethereum to bring even more liquidity on it. So like we said, winner takes it all. And once this tokenization frenzy is in full swing, once the interest rates get cut and liquidity is just flooding Ethereum, a lot of shifting will start happening. So even these blockchains, people will start taking their assets and bring it over to Ethereum because people want to go where money is. You follow where money is. You follow where liquidity is. And this is what's going to happen. So we might think that there'll be hundreds of blockchains and all of them will survive. No, there'll be just a handful of them, and there'll be one that will take it all and that will really dominate, right? And with that said, this is the whole strategy, is that since Ethereum is not in direct competition with the US dollar, as a matter of fact, Ethereum is supporting to manage and to get a grip of the US debt, and Ethereum is actually helping the US dollar to remain the global reserve currency. The whole idea is to literally use this opportunity to flip Bitcoin for Ethereum to become the #1 blockchain. And in that way, it will be also much more easier to sell Ethereum to retirement pension funds, to all these major institutions that will want to invest into the Ethereum ETFs. So there's a lot of great opportunities coming in front of us, ahead of us, that is going to land on Ethereum. And Ethereum, the difference between Ethereum and Bitcoin, again, Bitcoin is supposed to be a store of value, right? A digital form of gold. However, Ethereum is literally the technology that you build on top, like we saw here, right? If we go here, we see that you're building large applications such as Lido with 33 billion in liquidity, Eigenlayer 15 billion, Aave 11 billion. So, and all of these applications are built on top of Ethereum, and they're using Ethereum for transaction fees, right? And if you want to use them, you have to pay Ethereum. Look at Rocket Pool is another liquid staking. You need Uniswap. All of these are large institutions with large liquidity, and they're all built on top of Ethereum, using Ethereum as gas fee. So you get the idea. So Ethereum is a way more attractive investment for institutions because you're literally investing in the technology itself instead of investing in a digital form of gold, right? You're investing in the technology itself in the form of Ethereum. And this is what institutions have understood. And this is why you see that Bitcoin, Blackrock, JP Morgan, State Street, ARK Invest are all building on top of Ethereum, right? To bring this home, really, to highlight even more, you see how I want to show you this. I want to close out with this. You see how the largest, this is a global market now, right? And this shows you where the most interest is. Most interest is in private credit, right? We've discussed about debt many times. Debt generates revenue. Debt can either be your asset or your liability. In this case, debt constitutes over 75% of all real-world assets, right? You see how we were talking about real-world assets, right? How all State Street, JP Morgan, all of them, they want to issue, real-world assets, which is bonds, funds, and credit on blockchains. Where do you think they're getting this credit from? BlackRock is always at the center of everything. BlackRock has trillions of dollars in mutual funds, which they're getting ready to tokenize. And they're tokenizing this on the Ethereum blockchain, right? And they already have a liquidity fund that is literally using their revenue to purchase more and more US debt, and then using the revenue to keep compounding and purchasing more US debt. And this is being paired with the USDC stablecoin. USDC stablecoin is getting ready to get a banking license and become the first and only full reserve bank in the US, right? Once they establish that, it will be so easy. And they want to also do an IPO, initial public offering, meaning they want to become a public company. A Circle wants to. So there'll be a public company, fully managed. The reserves will be managed by BlackRock, right? They're backed by JP Morgan and Goldman Sachs and Coinbase as well. So all these players are getting ready to play together, bring all the liquidity on Ethereum blockchain, tokenize these funds and use them as collateral, and then this is what's going to happen. Once they use these tokenized assets as collateral, they're going to issue credit, private credit. This means this goes to institutions such as Apple. Apple needs manufacturing. They need production. They are going to take on billions of dollars in credit, and they're going to get it from JP Morgan using Blackrock's mutual funds as collateral, right? So, and this is how they're going to generate tons of money. And they're also going, this private credit also, of course, for you and me, right? For the mortgages, for all sorts of things, right? So we need to understand that the future is extremely bright, and private credit is the #1 booming business. And like we discussed in our last community event, our financial monetary system is based on debt, but debt is something that we don't want to do anything with, because this blockchain technology doesn't require debt. This is why you see the only people that are really pushing debt are those that are in the traditional financial markets. The Blackrocks are pushing debts. The JP Morgans are pushing debts. The State Streets and all of them. These are financial institutions, traditional financial institutions. They are the ones pushing debts, right? And you see here also, they're charging you to borrow, they're charging you 8%, right? And this is 8% compounded annually. So you can imagine, right? They're showing you how they have a high liquidity, 1.5 billion, and they want you to borrow, and they give you us the best borrow rate, 8%, right? So literally what they're already doing in the real world, they're bringing it now on chain to keep you indebted, because that's how they make money, right? And this is exactly what sets us apart, because they tell you that you should borrow stablecoin, DAI. DAI is a stablecoin, right? So they want you to take your asset and then borrow against it, deposit it, stake it, and then borrow against it. We all know what happens to volatile assets, right? They get liquidated. So during a bull market, everything is fine, but there's 3 years of bear market. So during that time, your volatile Ethereum that you borrow a stablecoin against is going to drop by at least 80% in value. That means you're going to lose your asset that you deposited for borrowing stablecoin, and then you're borrowing it at an 8%. Now, why am I telling you about this? Is to now it's time to zoom in, right? Let's zoom in. Let's zoom in. The difference with us is we're not debt driven whatsoever, right? We're liquidity driven. You take no debt on yourself at all. Actually, you have a very liquid asset that is literally scarce, meaning the supply shrinks, right? Like you see here. We started with 1 million in total supply. Now we're down to 968,000. And with every buy and sell, with every trade, this number keeps shrinking. So literally you have, let's go through this again. You have an asset that has staking as utility. And like we discussed, staking, if you look at the top 10 tokens, they all have something to do with staking, right? Look at the top 3 tokens. Staking. Aave is a lending platform, but it's heavily into staking. Maker, you also stake your ETH to borrow money against it. EtherFi, you also stake. Uniswap, it's an exchange, but you stake. Rocket Pool is a staking. I think you get the idea. It's all about staking. So if you have a solid staking platform that is not inflationary, but rather it's scarce even, there is nothing like it in the market. Lido is not the inflationary. You get more Lido, right? You get more Eigenlayer, you get more Aave, you get the idea, you get more Uniswap. And these tokens are inflationary. They're not deflationary, let alone scarce. And this is now where we see what's happening in the real world. While majority are still falling for the debt trap, we looked beyond and they're trying to lock you down with the 8% that you borrow, and you're using your own assets that is volatile, and you have to stake it, and then you borrow to get stable coins. This is what we are offering. This is what we do differently. First of all, we're extremely liquid. We're focusing on liquidity, and we retain liquidity in 3 different ways. The obvious way is through trades, buy and sell, right? The other way is through our 10% reserve that we stake and do buybacks, right? The third way is by our generating revenues through our staking boosters, the NFTs, right? These are the ones you need to maximize your USDC distributions to 100%. So every revenue generated from these sales go towards liquidity, right? And then finally, we are the bulldozers, right? Meaning that the community, individually, we can do the same thing that this smart contract is doing right here. What this reserve is doing, we can do it individually as well. And it's a win for us because we are compounding, right? Instead of paying 8%, and this is debt that is being compounded, and our assets are locked in, right? So that we can get stable coins. The way it works is you get stable coins in the first place without incurring any debt. So you're staking a liquid asset that is scarce, and you're receiving USDC distributions for it. So why would you need to borrow? Why would you need to fall into private debts? You don't have to. That's the whole idea. Now you have a liquid asset that is scarce and that issues USDC distributions to you without having to pay 8% by staking your volatile asset. Here you have an asset, it's already liquid, and it keeps becoming more liquid with every trade, and it's scarcer, meaning its supply started at 1 million, right? And now we already burned more than 31,000, and it keeps burning more and more. So you have a scarce staking platform. Already close to 60% of the supply is being staked. This is amazing. Like, you have an asset that 60% of it is staked. The total supply keeps shrinking. It keeps accumulating liquidity, and it gives you USDC distributions, and you don't have to pay interest rates on it, because we don't believe in debts. We don't want to indebt the community. Actually, we want the community to have a cash flow, to have distributions, to have a liquid asset, right, that is scarce and that gives you USDC distributions. Here, you have to pay 8% to get your USDC, to get your stable coin in DAI. Here, you don't have to even pay for staking or unstaking, and you don't have to lock your tokens for a long period either. You can unstake anytime you want. So you see how it's more advanced, and it's pushing towards liquidity and being your own bank. Have your own wallet, be your own bank, have your own liquid asset that you can stake and unstake anytime, and that you're receiving USDC distributions that are sustainable, right? Why do you have to fall back into the trap of borrowing for 8%? That's a high interest rate, right? And then you have to lock up your asset for I don't know how long, only to get stable coins. Meanwhile, you have to pay 8% for borrowing that stable coin. That's wrong. That's exactly what financial institutions want you to fall in the trap for on the blockchain now. We're doing away with this. We already discussed how our money works, right? Let me find it. We already discussed how our money works, right? This is how our financial monetary system works. It's inflationary. It's losing its purchasing power, and it's debt driven. So this is a downfall. Why imitate what is broken? We need a new way of money. We need a new way of a monetary system. And this is the way to do it right here. It has to be liquid. It has to be scarce. And it has to be giving you sustainable incentive. Now you have a liquid asset that is issuing USDC distributions, and that is scarce, right? And that is sustainable and efficiently using its trading volume. This is the ultimate asset that you want. One that has is staking and receiving USDC for buybacks, and then also using a sustainable revenue source through the staking boosters to also generate even more liquidity. And because we are an informed and educated community, and we understand the power of compounding, and we do that in our own wallets, it benefits not only us individually, but it benefits the entire community too, because the more you compound, the more I compound, the more liquidity we retain, the more we burn, and the more USDC distributions are being accumulated. Now multiply this by 10,000 or 100,000 community members, and you get the idea. So let's not fall for the institutions, because they are using their own over-the-counter liquidity pool. They're doing their own thing. Meanwhile, the traditional centralized exchanges are dropping. They are falling in 3 consecutive months. And soon, centralized exchanges will go belly up, will go bankrupt. Meanwhile, if we don't accumulate and retain liquidity, we'll be forced to move over to OTC and trade with them, because that's where all the liquidity is, right? This is where the liquidity is with ETFs. So decentralized institutions, decentralized projects and communities need to be retaining liquidity. Stay away from debt and paying interest rates on debt. And you're paying on an illiquid asset anyway, illiquid and volatile. And here you can be part of a liquid asset, and liquidity brings stability. At the same time, it's scarce. It keeps burning. You don't have to set up a burning schedule and do a burn event, but it's burning consistently and into perpetuity. And also you receive distributions in the form of USDC in perpetuity, meaning as long as there's volume, as long as there's liquidity, there'll be volume, right? And the more liquidity you have, the more volume you get. And this, we've seen how this is exactly what's bothering the industry. A lot of people don't have liquidity. This is why they have to borrow. This is why the private credit sector is so lucrative, right? The debt business is very lucrative. And this is why you see State Street, JP Morgan, and all of them, they're getting into stablecoins, because stablecoins are very lucrative. And stablecoins are debt-driven businesses, right? You purchase debt and you receive interest rate for purchasing debt. And this allows the US government to print even more fiat. So it's a vicious cycle of constant liquidity. And this will be needed to accommodate trillions of dollars in real world assets. So this is why people speculate that this bull run has the potential to be a multi-year bull cycle, right? Through all these tokenizations, through all this liquidity that is getting ready to flood the market in the trillions of dollars. And because now all these institutions are into stable coins, and these institutions will be required to purchase US debts, which will give the government green light to print even more fiat. It will extend the bull cycle, because bull cycle is based on how much liquidity is in the market. And with this system that we're seeing, with Onyx being on the Ethereum blockchain, JP Morgan having their own stablecoin, State Street having their own stablecoin, Blackrock using USDC, and so on and so forth, they're all required to purchase US debts. And as long as these trillion-dollar institutions are purchasing US debts, that means the government can print trillions of dollars in fiat. And guess where this fiat is going to come to? It's going to come to crypto because it's the most lucrative asset class, the crypto space. The bottom line, understand that there are two different markets. There's the centralized market where retailers are trading, and this market has been dropping for the last 3 months. And as you see here, since March, it's been dropping over 50%. Then there's a second market, over the counter. This is where the institutions trade, and the large institutions trade. These are the JP Morgans, the Goldman Sachs, the State Streets, and all of them, and large whales. They're trading over the counter. These are two separate markets. They can trade billions of dollars and it won't move the price here, right? Retailers are moving the price, not institutions, right? We are just hearing Larry Fink speak, and we're so thrilled, right? We hear Larry talk about Bitcoin, then we rush to the centralized exchange to purchase, right, Bitcoin. And then when they're ready to sell, they come and sell in this market right here. So they're using retailers at exit liquidity, right? So this is what we need to understand. This is why decentralized exchanges or decentralized communities need to retain liquidity, need to be liquid, need to be scarce, and need to give incentive that is sustainable, and need to use their volume efficiently, right? Stay away from debt, stay away from borrowing stablecoin through a volatile asset at an 8% mark, right? When you can literally stake without having to pay debts, and you receive your USDC without having to pay for it, right? So you just see how institutions are here to get you into debt, right? And this is what we always discuss. They want to put you in a trap, in a debt trap on the blockchain now. When you can actually pick to be liquid, choose to be liquid, choose to have USDC distributions without debt, without paying interest, right? And now you can use your distributions to compound your liquidity instead of compounding your debts. The choice is yours, right? And this is how we're going to close. Don't fall for the current monetary system that is inflationary, debt-driven, and you lose your purchasing power. This is exactly what these institutional applications are here to do. They're here to keep you again in debt. They want to take your assets because they know that you have volatile assets. They make you borrow a stable coin, but you give them a volatile asset, you'll be liquidated, because that's how crypto is. One day the market is great, the next day is a bear market, and you go down by 50%, and then you get liquidated, and then you lose your asset, and you're stuck with a stable coin that won't do you any good, right? So this is the solution that we have, is that we have an asset that is driven by a liquidity monetary system that is scarce. It keeps shrinking in supply, and that issues USDC distributions based on the trades and adaptation of the platform. And it's efficiently using its volume, its trading volume, to even accumulate even more liquidity, burn even more tokens, and issue even more USDC distributions. And this is how you have a sustainable and efficient platform that is decentralized, and that is putting the community interest at heart, right? And enables the community to have a liquid asset that is scarce and that issues USDC distributions without putting them into debt and having to stake their volatile assets to borrow a stable coin at 8%, right? So stay away from all these traps that are being presented to us on the blockchain now. We know better than this community. Let's not fall for this. Our platform is all about liquidity. It's all about distributions. It's all about scarcity. And it's all about efficiently using our trading volume to accumulate even more liquidity, burn even more tokens, and issue even more USDC distributions. This is the message for today, community. Let's understand that there are two different markets. One is for the retailers, and the other one is for the institutions. And the one for institutions is where the most liquidity is, right? Combined, it's about 70 billion in liquidity. just Bitcoin ETF alone. And in centralized exchanges, it's barely 1.3 billion. It's clear that that's where institutions and large investors are going to trade. They're not going to trade on centralized exchanges. And this is why we see how centralized exchanges the volume has been shrinking, and it keeps shrinking, right? And another thing that we need to understand is that let's not fall for debt again. Let's not fall into the hands of debt, right? Let's maintain our liquidity status. Let's have liquid assets that gives us, that issues sustainable USDC distributions that we can use to compound and grow our liquidity instead of taking on debts at ridiculously high percentage that is being compounded against us. Let's not fall for that trap, community. With that said, let me share my screen. Let me come back to you again, community, and check with you whether there's anything coming from your side, if you have a feedback, comment. And if not, then we can wrap up the session today and call it a day. Bear with me as I'm working on sharing my screen. All right, community, I'm back. Let me set this up nicely here. All right, let me check with you. Let me see what you have here. Queen Podi says, we are here, King Steve. We are blessed to be here. Continue grooming us. God sees, he'll surely bless you. Thank you so much, Queen Bondi. Podi, you're very much appreciated. I see you also on all social platforms. It's always a pleasure seeing you here. It's nice having you here as well. Thank you for your kind words, and thank you for always participating in these community events. And we are very humbled to be part of this beautiful community. We have Queen Alice here as well. She says, hi, Steve. Nice to be here again. Looking forward to learning from you and looking ahead to great things ahead. Kindly clarify on staking. Do we stake once or we keep staking on the tokens one buys? Excellent question. Excellent question. Each time you purchase new tokens, you have to stake them. But once you stake all of the tokens you have, it's good. You don't have to keep staking them, right? You can just claim your USDC once you can receive them. But as far as staking, once you staked all of the tokens you have, that's it. You don't have to keep staking them. But if you purchase additional tokens, then you have to stake those additional tokens also. That's how it works. I hope that answered your question, Queen Alice. Great question. Great question. My brother Abdullahi says a warm greetings to you all, and a very special one to you, Steve, for doing a great job as always. Thank you so much for being part of this session again today, my brother Abdullahi. I enjoy reading your comments, and you are very much appreciated for your leadership, your consistency, and it's a pleasure having you in the community. We have Queen Patricia says that good evening, family. Good evening, Steve. Thank you again for your commitment. Sorry I joined late. I'm away in the Eastern Highlands. Stay blessed. It's a pleasure. Thank you for still taking your time and being part of us, even though you had business to attend. It's always a pleasure seeing you in the community as well. Thank you for participating in this community event as well, and we appreciate you very, very much. Queen Pat D says, hello, all queens and kings. We are glad and blessed to be here. Great enlightenment indeed. Since liquidity is going over the counter, how is this going to affect traditional markets during bull run? Amazing question. Amazing question. Keep in mind, the last bull runs, even the last bull cycle in 2021, it was led by you and me, by retailers. This is the first bull cycle that institutions are actually participating. So it's not so that we need them. They need us, right? We don't really need institutions. We've been going through bull cycles, especially the last one was the largest bull cycle in the history of blockchain. And we did it all on our own. The retailers did it. So we shouldn't be concerned with the over-the-counter, because at the end of the day, even over-the-counter is purchased by wealthy retailers. Majority of over-the-counter are whales that are retailers. You and me, wealthy individuals that are retailers, right? So they need us more than we need them, because at the end of the day, retailers account for over 70% of all the economic activities. And the whole purpose and idea of printing or stimulating the economy is to get these fiat currencies in the hands of retailers, you and me, right? So that we can run around and spend it and put it right back into the economy, right? And this is why we don't have to worry about OTC, because retailers that use centralized exchanges and decentralized exchanges are the majority. They are the ones that really, once the liquidity comes into the industry, all these trillions of dollars that are about to enter the industry, mainly Ethereum, like we saw, it's already the most liquid blockchain. Even more liquidity is about to enter. And because we are the retailers account for over 70% of all activities, economic activities, we don't need institutions. Institutions need us. And that's the beauty of it. Let me make a specific example. During the last bull cycle in 2021, it was only led by retailers, by you and me, right? And 24 million retailers were able to quit their jobs and retire, right? 24 million in the US alone. And this was without institutions. This was just retailers. So this bull cycle was extremely successful. So this is why I'm saying that we don't have to worry about OTC at all. We just have to focus on being part of ecosystems that are retaining liquidity, that put the retailer's best interest at heart, and that doesn't use retailers as their exit liquidity, right? We're not giving any financial advice. We're just informing and educating the community so that you can make rational decisions on your own. So if you see that there are two different markets for Bitcoin, and one market is to attract retailers to get their liquidity into that market, meanwhile, they are trading on their second market, but only if it comes to selling, are they selling in the retailer's market, right? If they're buying over the counter among themselves. But if it's time to sell and the bear market starts, guess where they're selling? They're selling where the retailers have put all their money in. So use that information however you want, right? And to answer your question, we don't have to worry about OTC at all. All we have to focus on is get involved with a community that retains liquidity for you, that doesn't use you as exit liquidity, that is efficient, that is sustainable, you know, and let's make such decisions for ourselves, right? Because I just wanted to highlight that there are two different markets, one for retailers, one for institutions. When it comes to buying OTC, when it comes to selling, they're selling in the retailers market, because that's where they accumulate, all the liquidity will be accumulated from the trillions of dollars that will be stimulated and passed through the economy, right? So we need to really understand that. That was a great question, Queen Patty. Very good question. Brother Ernest says, good afternoon, Queens and Kings. Good evening, Queens and Kings. Thank you so very much, Brother Steve, for bringing light to some of us here. It's a pleasure. It's such a pleasure to see you in the community, Brother Ernest. And thank you for your feedback. You're very much appreciated. Another question from Queen Part D here. Since Tether is not compliant with MiCA, how come it's booming? Excellent question. MICA is Europe. Europe encompasses 27 nations, right? And Tether is all other nations, developing countries, right? Tether is big in developing countries right now. And because they're so large, it's not just going to, they're not just going to lose their market share overnight. It will take time because compliance is key. And I listened to one of the interviews with their current CEOs, and he hasn't even applied for MICA license, and he's not intending to because he doesn't like the regulations that MICA wants to place on them, right? So he's not intending to apply. US regulations are also, you need a banking license, you have to register in the US. So they'll lose the US market, which is the largest financial market. They use the second largest market, which is the European market, right? And because the US dollar is the main stablecoin used on the blockchain, down the road, eventually, it might catch up with them, right? Because right now, you have to abide to the regulations if you're a stablecoin issuer. As we saw today, large institutions with millions of clients are issuing their own. So, for example, JP Morgan, they have millions of clients, and they will rather use, and these are institutions, so they will rather use JP Morgan stablecoin. Look at BlackRock, for example. BlackRock has trillions of dollars, and they have millions of clients globally, and they are paired and partnered with USDC. So guess what stablecoin they're going to use? They're going to use USDC, you know? So if it comes to institutions and regulations, clarity, compliance, transparency, USDC is the #1 stablecoin. And it's just a matter of time once liquidity starts getting into the markets, regulations are in full force like they are right now. They can't do much in Europe. They can't do much in the US. And they're just focusing on developing countries such as Asia, Africa. And this is where they're focusing on currently. And I want to also highlight that majority of Tether is on Tron. So wealthy Asian investors with billions and billions of dollars are using Tether to get money out of Asia into the US dollars. So this is what they're using Tether for, basically. This is why you see Tether is just booming so much, because they're wealthy Asian investors that are not allowed. Because keep in mind, China has banned basically crypto, right? They keep banning and unbanning crypto. So it's hard for wealthy individuals to get their money out of China. So what they do is they purchase Bitcoin with it, right? And then sell it for a stable coin, preferably Tether, because it's a Chinese company. And that's how they hold their wealth in USDT. This is why it seems like, oh, Tether is still booming, Tether is doing so great. But these are just wealthy individuals and wealthy exchanges that are literally just holding their assets in stablecoin, because legally within China, they're not allowed to hold a foreign currency. So the only way they can do that is through the blockchain technology, through cryptocurrency, and they do that in the form of Tether. So it might seem like Tether is booming and they're doing great. However, they're just avoiding and ducking and hiding behind regulations, and eventually it will catch up with them, right? Besides, all these tokenized assets that are about to be on the blockchain for trillions of dollars will be on BlackRock and JP Morgan. And because JP Morgan is on a private network, it doesn't help them. There's not enough liquidity. So obviously, if BlackRock is using USDC, that means that JP Morgan will also use USDC because they're partnered, right? JP Morgan is using BlackRock's assets as collateral. So that means that to back these collateralized tokenized assets, they're paired with USDC. So USDC will take off and will be the number one stablecoin. It's just a matter of time. Another amazing question, Queen Party B. We have Queen Wangechi here. Wow, very educated. Thank you so much for your feedback, Queen Wangechi. Always a pleasure seeing you in the community. I have my brother Franklin here. Thank you for tonight's teaching, my brother Steve. Thank you as well, brother Franklin, for showing up and being part of this community event today. Kindly, Steve, please take me through on the USDC thing. I haven't understood it yet. Okay. The way USDC works, meaning, is it the staking, like the staking part of it? Okay. What I can tell you is that I'm going to explain it one more time, but Queen Wangechi, I really encourage you to join Zoom, right? It's always open every day, and you can have Queen Val, she'll walk you through it. She's always on Zoom, and she can literally show you how it works on Zoom. But let me explain it to you one more time, how USDC works. The way USDC works is that once you stake your BRL tokens, and once the volume is in, right? Because the way USDC is being accumulated is through, let me share my screen here. Let me show you this. Okay, you see here, oh no, it's not here. Let me share my full screen. I want to show you this briefly. I want to show you this. If you come here, you see our number one wallet here is a staking platform. You see like 60% is staked almost. So I want to show you our staking contract, right? You come here, you press here, and now you see how much USDC we have. This is a contract. This is the staking contract, right? So whenever you stake your token, you stake it, it's here. You see the amount, 580,000 tokens, right? BRL tokens. This is where it's locked in the staking platform. And this is where all the USDC is being accumulated. We showed you here that 1%, you see this 1% of trading volume goes to USDC, right? And it's being accumulated in this smart contract. This is a smart contract. So this is where all the USDC is being accumulated. So whenever you decide to stake your tokens, right, on the staking platform, right, you can come here and stake your tokens. I don't have it connected. So you press here, you connect your MetaMask, right? And once you connect it, you can stake your tokens. And then you see already almost 60% of the supply is being staked already by the community. So once you stake it, you can participate, you can be part of the USDC distributions that are being accumulated on this smart contract. So far, there's roughly 2,000 USDC in there. But obviously, once the volume picks up and the liquidity starts growing and even more trading volume comes in, this amount will of course increase rapidly. And then this is where all the individuals, the community members that decide to stake, they'll be able to stake here and receive the USDC distributions. And the way we set this up is that the more liquidity we retain, right, the more trading volume will come. Because where there's deep liquidity, there's a lot of volume also. And this is what we need to retain, keep retaining more liquidity and keep buying even more tokens. And most importantly, like your question is, more USDC will be accumulated, right? We always do an example. Let's make an example. I like to do examples. Right now, if we go, let's scroll all the way down and pick any community token. Like this community token has a volume of 34 million, right? So let's do a math, for example. Let's say we have 30 million. So if we come here, and just to have an idea how much USDC that would be, right? That's 1%. So 1% of 30 million is 300,000, right? So that means 300,000, this is in 24 hours. This is in one day. So 300,000 worth of USDC will be accumulated and it will be stored right here. You see in this contract. So this means that if you stake your tokens, you'll have a share of these USDC based on how much BRL that you staked, right? And like you see here, so far there are over 580,000 BRL staked, which represent close to 60%, like you see here, right? 60% is being staked. So the more you stake, obviously, the bigger your share is to receive USDC. So this is why we always say that if you do what this smart contract does, you stake and you just keep doing buybacks, you compound. Compounding means buyback and stake. You just stake and USDC, buyback and stake again. Your share of the USDC becomes larger and larger, right? That's how it works. The more people stake, the more people have to share, right? The more people stake, the more people share this pot. But the less people stake, the more it is for the rest of everybody else, right? So this is how it works. Queen Wangechi. And to really see it physically, how the staking functionality works and all of that, I encourage you to join Zoom. Queen Val is an expert if it comes to staking. She'll have you share a screen or share a screen and then walk you through it and show you how it really works, what it looks like, and show you also with the NFT boosters and all of that. She'll be able to walk you through. I highly encourage you to join Zoom and ask Queen Val to walk you through a staking if you need even more explanation. And it will be good for you to see it physically as well. So I encourage you to do that. Let me come back and continue. Queen Wangechi, I hope this answered your question. And I still encourage you, even if it answered your question, to go through a Zoom session with Queen Val. She's on a Zoom every day, and she'll really help you with that. Okay. Queen Alice says very well and clearly answered. Thank you, Steve, and be blessed. Thank you so much, Queen Alice. I'm glad that your question was answered. This is what these sessions are all about. We really want to, answer as many questions as possible. We should be all on the same board, and we want everybody to really get the questions answered. And the more informed and educated we are, the better for us as a community. My great brother Theo says, fantastic session, great professor, thank you. You made mention of the huge growth of stablecoins in the last 4 years and how Hong Kong is preparing stablecoins regulations as well. Are they or any other country on the verge of implementing proper regulations like MiCA? Absolutely. Great question, brother. My great brother Theo. Many nations are rigorously working on MiCA, but one thing I have to say is that the WEF, the World Economic Forum, which is based in Switzerland, they literally regulate and set regulations for the world. So with MiCA in place, and MiCA is the very first clearly set regulatory body that was set based on crypto. It's for custody, exchanges, and stablecoins. So many countries will copy paste MiCA, right? And US is also in the works of doing so, of coming with their own regulations as far as custody, exchanges, and stablecoins. So I believe with MiCA, even the US, I'm sure they're reviewing and looking at, copying what MiCA is doing. and they'll implement it, right? So it's always important to understand that. That's a great question. So yes, countries, nations are busy working on their own regulations, and with MiCA in place, they'll use this as a template. Many don't know where to start, but once MiCA came out, many nations took MiCA as a blueprint, and now they can tweak it to fit their own geographic region, or to fit their own liking. They can now tweak it. People are not so original. Many can't come up with something from scratch. They usually wait for Europe, led by the World Economic Forum and the BIS, the Bank of International Settlement, or the MIF, Monetary Information Bank of International Settlement. It's very important to understand that MiCA sets the standard and is looked at as a blueprint, so that other nations can tweak it however they want it. And I believe US is next to come up with something, and other nations are right behind them. So definitely everybody's really scrambling to come together with clear regulations. Whoever sets them first will have the market advantage, right? Like right now, Europe is way ahead of everybody else, right? Singapore was ahead, even more ahead than Europe. And other nations, I know US is right behind, and other nations will be also close behind as well. Great question, Brother Theo. Uncle George says, hi Steve, hi Queen Mother Wino and the BULLRUN fraternity. Have just enjoyed a very enlightening session. We grow every day with your tutorials and are very grateful indeed. Thank you so much, Uncle George. It's always a pleasure seeing you in the community. You're so much appreciated for all the efforts, inputs that you put in, and your encouragement, and how your leadership in the community as well. Thank you for the kind words. My brother Abdullahi says, public institutions asking you to stake your stablecoin at 8% interest rate in order to borrow or be indebted. That's indeed a trap, and it's horror. This is a fiat process. Stay away. Very well put together, my brother Abdullahi. Very, very well. And this is what, if you're not informed and educated enough, you might fall for it. Why put your assets at stake to pay 8% interest, right, on an asset that is very volatile and illiquid, right? And this is dangerous, right? So you can lose all your assets once the bear market starts. During a bear market, assets go down 40% a day, 80% overall, and if that happens to Bitcoin, every other asset that is even less liquid, it can happen easily as well. So we have to really be careful and be aware not to fall for this trap, only because it's on the blockchain now, because 8% interest compounded annually, we already spoke about compounding, right? So why should you compound debt if you can compound your liquidity? This is what sets us apart. We push aside debt altogether. We focus on liquidity, right? So you have not only liquid asset, but that liquid asset that is scarce is also issuing USDC distributions for you, because you're putting your assets at stake and stabilizing the ecosystem, right? That's what you get as an incentive for you playing a part to stabilize the ecosystem. We are coming out of a bear market. The money printer is not even on yet. The economy is still bleak, right? Nobody has much interest in the crypto space yet. There's not much liquidity. The economy has not even been stimulated yet. All these trillions of dollars that are about to enter the market are not here yet, but yet we already have 60% staked. BRL, 60% of BRL is staked already. This will obviously has the potential to increase as the staking distributions are kicking in, as the trades are coming in. This is what we mean when we say it's a win-win for everyone. The traders are happy because they have deep liquidity to enter and exit their positions. Their stakers are happy because they have USDC in abundance, and the platform is happy because it's efficient, sustainable, and it's scarce, right? So this is very important to understand. So a great point you brought here, my brother Abdullahi. We have to be careful to have to pay 8% interest on a stablecoin when our ecosystem issues these stablecoins interest-free, right? So let's be careful. And all of this talk is not financial advice, it's just to inform and educate us. You need to go and do your own due diligence and understand all of this that, for example, Brother Abdullahi put out here, or that other community members asked, like Queen Alice or Queen Waringa. You have to be careful. Great question, Brother Abdullahi. Queen Val says he absolutely connect with me on Zoom anytime. So this goes for you, Queen Wangechi. You can connect with Queen Val on Zoom, and she'll walk you through the staking, and she'll show it to you. You can share your screen, and she'll walk you through it, show you how you can stake, show you where you can stake the boosters, all of that. It's very important for you to really see it physically as well. So thank you very much, Queen Val, for helping. And yes, you're very welcome, Queen Wangechi. Queen Val says here, let's be sure to leave a comment after the live stream, and also don't forget to like. We're 25 of us. Let's appreciate Mr. Steve by commenting. Let's go. Very great point, Queen Val. This is very important, as it will reach as many people as possible. This is very important, as this is how YouTube works, right? The more engagement it has, the deeper, the more people it will reach out to. And that's the whole idea. We want to reach as many people as possible. So thank you very much, Queen Val, for not only making yourself available every day for the community, if it comes to learning how to open your wallet, how to, get your ETH, how to safeguard your wallet by keeping your keys safe, how to, how staking works, for example, what liquidity is, all of this. You can just join Zoom on a daily basis. Queen Val will be there to walk you through it patiently and inform and educate you about it. This is what we're all about. So feel free to do that, Queen Wangechi. And thank you once more, Queen Val, for your inputs. My great brother Theo says, thanks again, my great brother, for answering my questions and for all that you continue to do for us all here in the community. Salute. Salute you back, my great brother Theo. Thank you for your feedback. Thank you for your question. It helps not just me, but the entire community, because these questions are very good, because we can all benefit from it. And we are always just as smart as as we all are. We need to be on the same page. Queen Pat D says, thank you, Brother Steve, for always answering questions and keeping us on the picture. Thank you, too, for asking these questions, because it benefits us all in the community. So thank you for taking your time and asking such great questions. We have Queen Mel here as well. Thank you so much, Mr. Steve. Thank you, too, Queen Mel. With the wisdom you gave us. Thank you very much as well. Community, I want to thank you all very much. This has been an amazing session. I'm very thrilled, and I always look forward to these events. Thank you for taking your time and being with us for over 2 hours, going through this session together. Thank you for the amazing questions, amazing feedbacks, inputs, encouragement. You're all very much appreciated. The takeaway today: there are two markets of liquidity pool, one for the retailer, one for the over-the-counter for the institutions, right? And also important is that we focus on liquidity, liquid assets that is scarce and that issues or incentivizes USDC distributions efficiently, right, and sustainably, compared to having to lock up your asset and then pay interest rates up to 8% for a stable coin. right? So why would you put yourself in debt if you can do the same thing with a more liquid asset, and you don't have to be put through paying interest for using your own assets to get stable coins, right? So this is what we want to change. We put the community's best interest at heart. We could monetize and take advantage of the community and charge interest rate for that. But why do that? Why exploit the retailers, right? This is exactly what we want to stay away from. We want to give the retailers the best opportunity so that they have the most liquid asset that is scarce and that issues USDC distributions that they can compound or do whatever they want to do with freely, right? Without having to pay interest rates, staking or unstaking fees, and their assets being locked for months and years. We don't want any of that, right? That is not in the best interest of the community. And this is it for today, community. I hope today's session was informative and educational to you, and most importantly, inspirational. I want to thank everyone that participated today and was part of this session today. It's been a pleasure on our sides. I want to wish you all a wonderful rest of your week, and hopefully see you again tomorrow or latest by Saturday when we have our VC on Telegram on BULLRUN. Welcome all new members in the community. As you saw, the links are all here and put in place. Let me find it real quick. So if you're new, you can join us on Telegram. We are very active on Telegram. BULLRUN, Killer Whale, Survivor. Survivor is our special token because it's very unique in the industry. It's dedicated to the queens. Of course, the kings are participating in it also as well, but it's put aside for the queens to really rally behind it and gives them a platform where they can feel at home and have a voice amongst themselves. So these are the links to all these Telegram groups. We are very active on Twitter as well, and obviously on YouTube as well. We have 4 weekly events on Sunday, on Saturday, on Monday, and on Thursday, on various platforms, on Zoom, on Twitter, on Telegram, and on YouTube. And we also have Zooms open every single day. And in the evenings, we have Telegram opens too. So it's up to you to pick what suits you best, and then join these sessions and ask questions, be engaged, and participate in this community. With that said, community, I want to wish you all a wonderful rest of your day. Stay blessed, stay safe, stay informed, and hopefully see you again tomorrow or latest by Saturday. Have a wonderful rest of your week. Bye-bye, everyone, and thank you so much for participating. Thank you very much, Brother Glenn. You too. Stay blessed, my brother. And bye-bye, everyone. Thank you for participating.